Hello guys, welcome back to my channel. I'm here again with something different today for you guys. Okay, this is I'll be calling this the FX technical episodes. This is the first episode, guys. So we'll be for this technical episodes. Okay, I'll be teaching you guys everything based on what price actions. Okay, stuffs that can actually help you to become profitable on the long term, on the long run, not on the short term scale. So please, if you're new to this channel and about to hit the like button and subscribe, please be patient to watch this video to the end. Don't judge, don't rush, just be patient and listen to me. You might end up finding this video helpful. All right, it might be helpful to you because I might actually touch an area which you might be getting difficult in. Perhaps maybe it might be area on how to get your entries. Just be patient and watch this video to the end. And if you find this video helpful, please also hit the like button and subscribe. And if you'd like me to continue this series of this nature, guys, please leave a comment in the section and I'll be able to look at it. Tell me what exactly you want, and I'll be able to do it in a way that will be helpful to and beneficial to everyone. So right now, let's begin. So today we are going to be looking at a few pairs. The first one is the VIX 25 index. On the daily time frame, we just mitigated what an order block. Okay, we just mitigated what an order block. We just had an order block mitigation. So therefore, we should be looking for what for sales to an area to a certain area of support, or maybe it's all based on probabilities. Sales to a certain area of support, okay, or maybe sales to this area here. So that can likely happen, or because that can likely happen. But on the contrary, looking at this, looking at this, this might actually be what a retest of this zone. It might retest this area, all right, and then continue to the what to the upside. So it might retest this area and what continue to the upside. So on VIX 25, we are bearish, short-term bearish, and then long-term what bullish. Short-term what bearish and what long-term what bullish. So the next thing we're going to be looking at, we are just the next thing we're going to do now is to scale down the time frame, scale down to the time frame, either to a 1 hour, guys. We're just going to scale down the time frame to a 1 hour, to the 4 hours. Sorry, guys. I'm just going to scale down to the 4 hours. All right, try to see what's going on. You see, the moment it mitigated that order block on the daily, you can actually see how we rejected on the 4 hours. You can actually see how I rejected on the 4 hours, and it's going to sell to an area of this, to an area, this area, and then probably continue to retest, and then might continue to the what to the upside. So on the daily, on the 4 hours here, on the 4 hours, you can actually see that this was a descending channel. We had a what descending channel, and you can see the multiple chart touches. And when the market came to here, it created what a flag, right? A bearish flag, and it sold, but could not reach the extending part of this down channel, but decided to reverse by giving us what a double bottom. You can actually see give us a double bottom, then break out for a double bottom, and then continue to the upside. So based on that, we should expect a retest of this area and then a probable continuation. So we can have a flag, and then continue to the upside because we are trading outside of this channel for now. We can have the market can actually spend some time here, like come here, just spend some time, and finally break to the upside. Okay, break to the upside. So this is what I might be looking at. I might look for a bullish flag within this area. Can look for a bullish flag within this area, probably a continual push to the upside. So this is just a retest, like a corrective move. It's going to correct now and then continue pushing to the upside because we are outside of the we're outside of the channel. We're outside of the channel for now. So right now, let's look at another pair, which is VIX 25. 1 second. I can remember giving this one to my VIP members during the late hours of yesterday, in the 8 hours of yesterday. So first, we're going to begin from the daily time frame. We're going to begin from the daily time frame. You can actually see that we have a test of this area, and we have had a breakout and a retest. First, the market was ranging on the daily time frame, and it was a very big word range because the market spent a lot of time here. Okay, which make this pair trading is difficult. Right now, it's going to be easy because we have a breakout, and if it will range, it will take a while before it will range again. So right now we have a breakout. Okay, the breakout, we have the retest and the continuation. So what the market just did now, it just came back again to this level of support to find support and to gather momentum to continue to what, to the upside. So we are going to scale down to the 4 hours, right? So going down to the 4 hours, what can we see? We can see that we have tested this support level. In the moment we tested the support level, what happened? The market pushed to the upside. On the 4 hours, what can we see? I can see a descending channel, which is kind of on what, on a clearer on the 1 hour time frame. It's kind of more clear on the 1 hour time frame. This is a descending channel, guys. As you can see, this is a what, descending what channel? It's a descending channel. All right, you can see a descending channel, guys. So based on this now, I know there were a lot of people who were selling around this, in and around this area. Okay, there were a lot of people who were selling within this area, guys. Why were they selling? You see those multiple candlestick rejections? Those were traps, okay, because they were actually thinking that that area is an area of what, resistance. Why they were not looking at the overall structure, which is the bullish structure. So the reason why I gave this trade to my VIP members is because we had a retest within this area. We had a retest. We had a retest, guys. We had a retest. So based on that, we had a retest and a master candlestick pattern, guys. So based on that, you just go in for your buys, guys. So your stop loss should just be probably below, so that no matter how much it drops, it's not going to take you out. It's not going to take you out. So perhaps could have just gotten your 90 points, your 900 points. That is target this key level here. And right now, what might happen is we might have a retracement to this key level, this area here, where the market tried to respect based on the 1 hour and continue bullish. So we might have this retest. It is going to be very steep. Okay, we might have a retest to this area, continue bullish based on the reaction we get from here, and then continue to the upside. So let's see, using a Fibonacci tool, let's see how many what level that is going to be now. Okay, so based on the fact that we have a structure here after the breakout, so let's look at that. So that's going to be 50% within that area. So I'm not considering that area to be valid, guys. For now, I'm not going to consider that area to be valid. For now, I'm just going to consider it to be valid. I'm just going to see how the market is going to react to this area. If it gives me if it comes consolidate within this area, if it consolidates, then I'm going to look for a buy structure. I'm going to look for a buy structure to continue to the upside. So for now, all our trades are closed. So we're just going to wait to see how the market reacts within this area. Then we can actually continue to the upside, continue look for buy entries again, and here should be our final target. Here should be our final target. So we are still bullish. We are still bullish. Buyers is still bullish because we are trading outside of the channel for now. So we're just going to wait for the market to retest, come back to this area, and then we look for buys. So the next one we're going to be looking at should be VIX 100. VIX 100, 1 second. VIX 100, 1 second. So if you like the series, guys, please hit like button, subscribe to the channel, leave a comment and like in the section, so that I will be doing more videos, more and more videos like this. First and foremost, you go to the higher time frame, guys. You go to the higher time frame. So on the higher time frame, what can we see? I can see that on the daily time frame, I can see that we had a breakout, okay, of a specific area, okay. Then we have a push to the upside, a little bit of consolidation, a little bit of what consolidation, well, consolidation or accumulation, whichever one you may call it. So whichever one is still correct. We had a little bit of accumulation, and we have an expansion to the downside. And we came with what happened here is we had a hit of a key level in the market. So it came back to a key level. The market came back to a key level. So it was able to find support, and spend some couple of hours there, which make the area well more reliable. So it came out to that area. So now let's go down to, you can see the way that daily candle behave, this the one within this area. Let me just zoom in a bit for you guys to see. So you can see the way this candle behaves. So the market was able to find support within that area, and then it spent a lot of hours there. So right now, let's go down to the 4 hours. Let's go down to the 4 hours. Try to understand or try to interpret what the market is doing. We can see that the market found support. Okay, give us a double bottom, break out, and then continue to the upside. So let me break this down. Let me break this down for you guys, so that a lot of you can really understand. A lot of you can really understand. So right now, what happened was, you can see it, let's look at some certain things. Let's look at some certain things. Let's look at some certain things. Okay, so you can see here that the market was respected here. Market respected here on the trend line. Okay, on the trend line, market respected here. Okay, respected here again. All right, just like that, just like that. Multiple touches. Okay, so respected, and we have this a lot of consolidation within that area. So that does not mean you should buy. You should buy, because based on the consolidation, if you buy there, your stop loss has to be very big, like somewhere here, for your safety. But I'm just going to show you guys some technique on how to like get into this trade without 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 being stopped out, getting in early without being stopped out. So on the contrary, looking at the upper part of this, we have this structure. Okay, so we had a breakout. What you do is you scale in again. You scale in again, guys. You scale in again. So now you've scaled in. All right. So on the 1 hour time frame, you have looked at the bigger picture. On the 1 hour time frame, there's a structure here. I don't know if you guys can see it, but your eyes are trained well enough, you'll be able to see it. You have a structure here. So you have a temporal structure, and you have a breakout of that structure. You have a breakout of that structure. So you could have been able to like get your entries within this area. You have been able to get your entries there, right? Get your entries there, and perhaps maybe you have moved your stop loss to break even. Okay, you're able to move your stop loss to break even. And then you have just been sitting on this trade, even till now. You could have just been sitting on this trade, and your stop loss would have been on the break even. So on another way of getting into this trade, is like this. So first, the next other way of getting into this trade, wait for a retest of a key level in the market. So the market did not choose to come to this area of where it actually had multiple touches, but it decided to respect here, and it gave us what? A bullish flag. It gave us a bullish flag after respecting that area in the market, guys. So it gave us what? A bullish flag. It gave us a bullish flag. So as you can see, that's a flag. That's a flag pattern, because if you add this to this, area, you actually, sorry guys, just a moment. If you add this to this area, you can see that that's a flag. So that's a flag pattern, and you can have been able to get into your trade. Okay, guys, you can have been able to get into your trade, and could have been able to get into your trade. Let's look at the scaling again for you to be able to get that entry. Let's get the entry scaling again. It's scaling again. So you see now that there was what a breakout of this area. You can see now that there was a breakout of that area, but here it wasn't reliable. It wasn't reliable. I've said you should enter based on this master candlestick pattern, based on that master candlestick pattern, but it wasn't reliable. So you wait for the breakout of this area, and then you just enter because it's a flag. A flag, you don't have to wait for a retest. Okay, for a flag, you don't have to wait for a retest. Your stop loss just below the area, or probably below the flag itself, and then that's the safest stop loss. And then you could have just risk. We are risking $8, you get a $20 at most. Okay, so the best or the other part is here again. You have a breakout of the high. You have a breakout of the high, and you have a higher probabilistic candlestick pattern. A cheaper stop loss. Okay, cheaper stop loss. So a cheaper stop loss. Yeah, the key thing I'm teaching you guys here is how to clearly identify the structure or the trend of the market. That's what I'm teaching you guys. And then how to look for your entries. I hope you pay attention, guys. So you have been able to risk. Now you have been risking a $3 or more, or probably $4, and then you get a 30 something dollars, which is actually, if you are using it 0.1, 30 something dollars. So another area again you could have entered, because you have already identified the trend of this market. Based on that, you are only looking for buys. Okay, the sales does not concern you, because if you try to chase the sales, you will be what? You will be trapped. You'll be trapped, guys. You'll be trapped. So don't chase the sales. The only thing that should concern you in the bullish market should be buys. Okay. The next area here, it's buying, because you have a breakout, a high being formed, a higher low being formed, and then now go down to the 15-minute time frame. You're able to like get your buys in. Perhaps maybe, yeah, you waited for a breakout, you had a double bottom. Okay, on the 1 hour, yes, on the 1 hour, don't rely on candlestick pattern alone, rely on structure mostly, because the riff will always mess you up if you are relying on candlestick pattern. For instance, you have a retest of this area, and you decided to buy. What happened? Your stop loss just below it. The riff would have manipulated it, but you were right, and they would have taken you out. So you just rely on structure. So on the 1 hour time frame, you come down to the 15 minutes. So now what you see here is you have a break of this area, which end up created a double bottom. Okay, and if you pick a trend line, you can see that there's actually a shift in what structure of this market. You can see that there's a shift in structure of this market. But if you have just entered without actually getting that confirmation, guys, perhaps your stop loss have to be very big. Most of your accounts are very small, so your accounts cannot actually hold, and that's why majority of the time you find out that you're blowing accounts. So right now, this would have been a better entry, because you would have waited for the shift of this one of the market on the 1 hour time frame. I've just waited for a shift of the market, like a break of the trend, break of the short-term trend and trend line. So you wait for the short-term trend line. Okay, so you wait for a break, a retest. Okay, and then you craft entered, and then target the highs. So based on, even though you move your stop loss to break even, If you go to my channel now, you see this trade. Okay, move your stop loss to break even, and then we're taken out at the break even, and then you could have entered again. Here. Could have just entered again. Because we are still within this area of temporal watch support level. So you have been able to have been holding this trade at the break even, but I'm not sure if it's actually going to get to that area because of the way it's actually behaving now. So because of the way it's actually behaving now, I'm not sure if it's going to make it. Now you could have just moved your stop loss to below here. So the next thing you're going to be looking at now, let's look at another pair. Let's break it down. So that everybody can actually understand. So next thing we're going to be looking at, let's look at the VIX 75 index. I hope you guys are loving this technical episode, guys, because if you do, please leave a comment in the section All right, leave a comment in the section, and also leave a comment in the section. Also like the video, subscribe to the channel, guys. So now let's look at first and foremost, let's look at the higher time frame before we come down to the 1 hour. Okay, the higher time frame is actually gives us a bigger picture of what we are seeing. Okay, what we are seeing, and it will give us a what we are seeing versus what we should expect. Okay, it gives you an opportunity to visualize what the market will actually do. Okay, so right now on the daily time frame, you discovered that the market was at the daily support, and at the daily support, you look for buys. You can see those rejection, the rejection, and then you report and you have taken your profit at the daily resistance, which is absolutely wonderful and absolutely what fantastic. But it's not that easy, man. It's not that easy. It's kind of difficult and kind of more complex. You have to really understand the technicalities. You know, not only understand, be able to interpret, and even with understanding all of this stuff, okay, and even if you can put the pieces all together, your emotions are still there, you know, to fight against you. The market is a very complex place. It's very, very complex. So now you scale down to the 4 hours. Now, if you were looking for sales, or let's say previously, if you are looking for buys, let's scale down. Let's scale down and look for buys within this area together. Let me show you something, guys. So let's look for buys within this area together. I know there will be some people who your account, majority of you, your accounts are very, very small. How can you look for buys? Okay, so here, yeah, first I know a lot of people would have gotten their buys within this area, even myself. Okay, I would have gotten my buys within this area. But there's one thing I'll advise you: you don't frustrate, you don't fight with the market. So why will I be getting my buys within this area and then trying to target the highs? So first, I can establish that there was a clear breakout. Okay, I was looking for a clean retest. So I'll be looking for a clean retest. Okay, market structure, which indicates or gives me confirmation, guys. So within this area, I could find reliable level and that can actually hold for the market. Okay, perhaps maybe, yeah, that should be my stop loss. I don't want to be too greedy. Okay, and I don't want to be to spend too much, guys. That could be my stop loss, and I'm targeting the highs. I want to target that area. I want to target what that area. Then that's a key level where the market can actually turn and then push back down a bit. So what happened? So the market was going up, and then we have a break of this area. We have a break of this area. So what will I be waiting for? What I'll do is I'll move my stop loss to break even, or I'll move my stop loss to somewhere around here and just sit tight and wait. And then what happened? The market took me out. Most often than not, you experience that. You experience that. You don't have to fight with the market. So then it comes back again to the daily support level again. All right. And I could see some rejection. I could remember we are seeing some rejection on the daily again. So what you'd have done is go down again, try to look for a shift in structure. Okay, go down again, try to look for a shift in structure, and you could have seen that shift in structure, guys. So right now you go down to your 30 minutes time frame or your 15 minutes, try to look for some confirmation, and then you can actually get an entry. Okay, yeah, which if you have gone to the 15 minutes time frame, since you had that break, within the 15 minutes time frame, and within this area here, yeah, you could have been able to like enter and then still target those highs, So you don't have to spend too much. Your first target should be this previous area, and then your second target should be just like that. You don't have to spend too much. And then another area again you have entered this market is another area again. I know sometimes you try it to fail, you try it to fail. That's actually how life itself is, and that's actually how the market itself is. So right now, there was another area again, you have entered and you have been able to succeed, guys, based on market structure. Okay, based on market structure, the area held very well. It held very well. It's all probabilities, but once you understand how the market actually works, guys, when you understand how the market actually works, don't target too far, don't target too far, don't target too far. Just be minimal in your targets. So right now you have been able to profit from this market. Okay, you have been able to profit. You have hit that take profit. You have hit another one again, and now what you have done is wait. The market came back again, give you another opportunity, give you another opportunity on the 4 hours. You can see now that here, okay, there was a breakout of this area. You can see now that there was a breakout of that area. All right, giving you a retest, giving you what a retest, guys. So right now, if you take your trend line, draw it all the way down, you can see now that there was what a clear what shift in what structure. There was a clear what shift in structure. There was a clear shift in structure. You can see now that this was also a descending channel, and the number one reason why this previous trade failed was why, because we had a hit of what the 4 hours for trend line. We had a hit of the 4 hours trend line. That's why this trade failed. That's why the trade would have failed. Okay, but you don't have what I've shown you now is you realize that you don't have to risk too much to trade any pair at all. You don't have to. Your risk is actually the key thing, the only major thing that will actually keep in the market long enough. Okay, so the next thing you look at now is buying from this area, because you can see that the 4 hours candlestick is actually respecting it. It's actually respecting it. Actually respecting it. And perhaps even if you take your Fibonacci level, 2 level, and then you can see that we are almost, yeah, we are the 50 or 50. Okay, you can see that you are the 50. So which is actually a reliable area to take buys from. It's actually a reliable area to take buys from. So right now, you don't just take your buys like that. You just have to scale down again. Try to like be able to see how you can actually spend less. See how you can actually spend less, guys. See I can actually spend less. So you have the rejection on the 4 hours. Okay, now we're looking for what a shift in structure. Shift in what structure? So now you have a shift in structure, and I can remember very well that if I go to down to the 30 minutes time frame, I had a retest within this area, which is kind of reliable and strong enough to be able to hold my buys. Let's go to the 30 minutes. So I see that I'm not just like I'm not just saying gibberish. Okay, on the 30 minutes, you see this master candlestick pattern. You have a retest. You had that retest, okay, and perhaps you had another breakout of this higher. You have another breakout of this area, and you had another retest. Could have just add another position. Could have just add another position and be able to like. So you see, guys. So stop loss just below, stop loss just below, guys, stop loss just below, right? Stop loss just below. I've just targeted here, right? And then another opportunities to scaling, right? Stop loss here, right? Stop loss here, and then stay target that area, which would have been wonderful, guys. And then you have just moved your stop loss to break even, and then just wait, then let the market play out. Right, this was another area opportunities to scaling again. So now that's that for the buys. Now let's look at the sales together. Let's look at the sales together. I just want to remove everything on the chart. Then VIX 75, yeah, VIX 75. Okay, so now first the established relationships where we are at the what support level, and we also what at the what resistance what level. So right now you scale down to the 4 hours, scale down to the 4 hours. Okay, you scale down to the 4 hours. So what we have on the 4 hours here is what a clear what. First, what I'll pick here, we have a high, okay, we have a high. This was the first, we have this touch, the second touch, and a third touch, which is what a clear case of what divergence. Because if you are looking at this two, this is what a divergence. So right now, adding this is more confidence, guys, that area is going to hold and push the market what to the downside. Okay, and push the what market to the downside. So based on that now, guys, So guys, okay, guys. So as you can see, guys, you can see, guys, here what we have here is what a retest, guys. So we have a breakout, okay, which you have gone down to a smaller time frame, like you have gone down to the smaller time frame, like the 60 minutes. You can see now that there was a breakout, guys. So you have looked forward your sell entries on the 30 minutes, or probably on the 1 hour, which, but on this case, there was a retest on the 1 hour, on the 30 minutes, and there was a confirmation on 30 minutes too. So I wouldn't have entered. I wouldn't have entered here because the market could have continued to the upside. So I decided you would have decided to wait for a breakout of this short-term trend line. So there was a breakout, and then you would have just entered, right? Your stop loss high above there. So and you could have rode the market all the way up. Your first take profit target should be here, and then your last take profit target should be at what the daily what the support level. So that's that for VIX 75 index, guys. And please, if you like this series, guys, please hit the like button and what subscribe. Hit the like button and what subscribe to the channel. Hit the like button and subscribe to the channel. Leave a comment in the section if you like me to continue a series like this. So the last one for today is what step index. Step what index? Step index. Step index. So for step index, guys, you see, so guys, for step index, okay, it has actually validated what I was looking at. I was looking at the scenario of where I could actually buy, but it's not actually respected. So I think that's that. Please, if you like this series and you like me to continue series like this, hit the like button, subscribe to the channel, leave a comment in the section, and I'll keep doing videos just like this one. Stay blessed, guys, and stay blessed, stay blessed.